the Employee Retention Tax Credit and PPP. Right away, people seem like they don't understand what's the difference between these two government programs. And if you're confused, I'm here to help you answer all the questions that you have on your mind so that your business can get the money that it deserves and is owed if you were impacted by the government shutdowns. So today I'm going to share with you how the interplay between the ERC, the Employee Retention Credit, and PPP can work, and the best decisions you can make for your business. So you're not going to want to miss this. So you heard right. The Paycheck Protection Program, PPP, was something that tons and tons of people learned about, applied for, got the money, and even got those loans forgiven. A lot of people thought, hey, this was free money for my business in a time when I needed it the most. But now I'm getting questions like, Rich, what is this employee retention credit? Apparently it's been around since March of 2020. The answer is yes. Yes, it has. Essentially, if you kept W-2 employees on the books, then you can apply for or file for with the IRS a tax credit that comes back to your business. If this is something retroactively that you're filing for, you're literally going to get a check for up to $26,000 per employee. However, you have to know how it works. How does it work with PPP? So let's dive into all of that. But before we do, please drop a little like right here. It helps with that YouTube algorithm, and I appreciate it. I think it's best if we start with just a little reminder of how PPP worked. There were some changes along the way. Then we'll dive into this ERC and how you can apply it to your business if you did in fact get PPP. So here we go. PPP was originally designed to be a forgivable loan. You could apply through a bank or any lender that was approved through the SBA, and they asked you for some payroll documents or some tax forms, and essentially then the money was deposited into your bank account. Many people were afraid of spending the money. Let's say something like over $20,000 got deposited into your bank account, and you go, okay, well, how am I supposed to use this? Well, if you recall, originally, PPP had a combination of using it for payroll and for approved expenses. But over time, there were changes, multiple changes that said, you know what? You can use the whole thing for payroll if you want, but there is a 60-40 rule that pretty much stayed in place, which meant you had to use at least 60% of it for payroll. I mean, that's what it was called. It's the Paycheck Protection Program, so they wanted you to use at least 60% towards payroll. Now, most of us, once we got that flexibility to just spend all of it on payroll, that's what people did. Whether you were a Schedule C, independent contractor, sole proprietor, just paying yourself 100%, or if you had employees, you were looking to, keep them on the books, and this Paycheck Protection Program gave you money to use to pay your employees. Of course, whether you spent those funds over the course of, let's say, 2.5 months, like 10 weeks, or you took 24 weeks, there actually was a second draw. So PPP1, PPP2. And again, most people that found out about it in time applied for the second draw, and they were able to get it, use the money. And by now, as of this recording, many people have already gotten the first draw forgiven, and they're either in the process of getting the second draw forgiven or they already have. So overall, congratulations, nice work. That program itself had a lot of twists, turns, and changes. So if you got those funds for your business and you've gotten them forgiven, then thumbs up, nice work. So let's move on to ERC, the Employee Retention Tax Credit. Now, this is specifically designed for businesses with W-2 employees. So I just want to say right away, all my sole proprietors out there, if you're a partnership like you and your spouse just run the company, but you don't have any W-2 employees on the books, you do not qualify. You have to be the owner of a company who runs payroll, and you have W-2 employees who are not family members. And as you can probably realize, this applies to a large portion of businesses out there. I'm thinking of restaurants, childcare, even nonprofits qualify for this ERC. And so if you need like more detail on it, I'll leave a link right here to an overview video I did. I think I called it something like better than PPP. What is like ERC, the employee retention credit. But just to sort of summarize all the twists and turns with that, you weren't originally allowed to apply for this tax credit and get the government PPP money. So a lot of people just kind of said, okay, I'm not dealing with the IRS, I'll go after PPP. But then they changed the rules and they said, yes, you can get ERC. And not only that, you can get it for 2020 and 2021. And they were much more generous and flexible with 2021. So just summarizing, breaking it all down. Let's just say you had one employee. I'm thinking of a summer camp, I run a summer camp. It's a lot of independent contractors, but I keep somebody on, all year to hire, fire, do the books. Okay, that one W-2 employee for 2020, you can get up to $5,000 for. And that's great. That's just for 2020. And now for 2021, I mentioned they're a little bit more generous. They actually let you get up to $7,000 per employee per quarter. So we're talking quarter 1, quarter 2, and quarter 3. There was some changes in legislation where you're going to be able to get quarter 4 and now you can't currently. That might change in the future, but right now we're looking at 3 quarters for 2021. Now, taking into account 2020 and 2021, even if you only have just one employee, you're going to be eligible for up to $26,000 in a refundable tax credit, essentially a check back to your business. Now, if you're interested right away, knowing that you do qualify, I'm going to leave 2 links down below in the description. The first one's going to be to a blog post article that I just wrote and published, so please check that out. And the second link is going to be to qualifying questions. If you just want to see potentially how much money your business could be getting for this ERC, again, I'll leave a link down below in the description to those qualifying questions. Okay, let me just break that down, kind of make it a little simpler to understand. This hand here, this is payroll. This is expenses. So let's just say you got a PPP. It was $250,000 and you used all of it, 100%, $250,000 on payroll. Then you cannot use any of those wages at all towards the ERC. So essentially, you'd be unable to claim an ERC, an employee retention tax credit, using those wages paid. Why? Because they were all PPP wages. So example 2, let's say you got that same $250,000 payroll, but only 200 of it is paid out in PPP. And then you use $50,000 of the PPP towards approved expenses. It could be, mortgage insurance, rent, what have you, right? Well, you're not going to be able to claim the $200,000 paid. Again, you use PPP money for that. But you were allowed to use PPP for approved expenses. And so long as they weren't used for wages, like that $50,000 we just talked about, then any balance that you had paid out in wages could then still be used. So in my example, we're talking you can claim $50,000 in wages paid out, because guess what? You still had that same $250K in wages. You only paid out $200K using the PPP. The other $50 from the PPP you used for expenses. So that means out of pocket, you're still out $50K, keeping those employees on the books. Now, hopefully I didn't lose you and your head's not spinning, but the point is that if you knew all this information up front, then you could have strategically used your PPP for wages and expenses, gotten the whole thing forgiven, draw 1, draw 2, and maximized your ERC. Now, if that is a little too late for you, like most people it probably is, it doesn't mean that you're excluded from the ERC. However, there may be a certain timeline or quarter where you won't be able to qualify. And that's where the good folks at the ERC specialists come into play. Again, I'll leave a link down below in the description to them. I've partnered with them and they know all the magic words and right paperwork to file to examine exactly how much of this employee retention credit you can get. They file the paperwork for you. And if you get the money, it's of no cost to you up front. They only take a small fee. Again, if you're interested in seeing if you qualify, I'll leave a link in the description to those qualifying questions. So if I had to do a quick recap on how ERC and PPP play together, in the beginning, they didn't. It was like oil and water, they just don't mix. And then as the rules began to change for PPP and then the rules changed for ERC, turns out you can get both. And if you haven't applied for ERC, then you really are pretty much just leaving money on the table. The only thing I will say is that the ERC is specifically for my business owners who have payroll, who have W-2 employees on the books. And if at any time during 2020 and 2021 you were impacted by the government shutdowns, if you had a reduction in gross revenue, then you're probably going to get some money coming your way. Of course, the IRS is backed up right now, so it might take 4, 5, 6 months before you see that money. But then all of a sudden you get one of those U.S. Treasury checks in the mail or direct deposit, and then you'll be on your way. So please check out all the resources that I've linked down below. If you're new to the channel, please hit subscribe and don't forget to ring that notification bell. All right, as always, I'm Rich, and until next time.